What's happening, everybody? It is Thursday. Welcome to Think About It Radio. Let's get your home loan ready. Can you dig it? Got my special guest with me this morning, Miss Crystal Guillen-Rios, WFG Marketing Director. Just a great individual. She's motivational, inspirer. She just knows a lot of good stuff, y'all. We're going to talk about some mortgage protection this morning. Senior Marketing Director, Miss Crystal. How are you today?
I'm doing amazing, Shelton. How are you?
I'm all right. Hype as usual. You know, just ready to enjoy another day. Just happy to be here, man. Happy to be alive and just grateful, Grateful for good relationships and good alliances, if you will. So it's all good. It is all good.
Absolutely. It's all good and definitely for another day. But most importantly, bring this amazing and important information to everyone.
That's right. It's all about the community, sharing this valuable information, And with that being said, man, let the people know who you are, what you do, and then we can get into the show. Let's get your home loan ready.
Well, like Shelton was saying, my name is Crystal, and I've been in the financial industry now going on 8 years. So I'm definitely passionate about showing people how is it that, financials work, also the protection, whether it comes to insurance, whether it comes to ourselves, whether it comes to protecting our money, and what else is out there. What is it that the 5% are taking advantage that the 95 need to hear about?
Solid information. 95%. So you mean to tell me there's only like a 5% of people that really is using the knowledge and the tools that's out here and benefiting from it?
Absolutely.
Those numbers are staggering. Well, you know what? Then that means the lane is wide open for people that have solutions, that people that can give you some value and give great information. So guess what? That's a good thing, right? Because if you're talking about now 5%, then there's room to grow. There is room to grow, right?
Yes, there is. And it's bringing the information because a lot of people may hear about it, may know about it, but do they actually have it, right? What is the first thing that goes out when, rainy day comes. So that is what we do to help them accessorize their portfolio, look over it and manage it. And you know what? You can have 3 to 6 months saved up, and it takes discipline, Shelton. It takes a whole lot of discipline, to have your money in order and have it in places where it's not just sitting, but it's making you some money. That is a whole other topic we're going to go into, but today I'm excited to cover about mortgage protection.
Yes, mortgage protection.
We are, in the market of, working very hard. We all do. We work very hard to pay our mortgage. But what happens when we unfortunately get hurt, when we get disabled, what is it that happens? What are the options out there, right?
Mm-hmm. Right.
Awesome. So there are different options, and when it comes to mortgage protection, because think about it, you, Shelton, you walk a client, 4 and 5 through the process, right? I remember when I, walked through the process of buying my home, it was almost 8 months. We were, fixing the credit. We were finding the right house. Then we deals when the fell off. Right, it's a whole almost a year invested of finding that right home. We're finding the right interest rate that we want, something that we can budget in. Then we settle in, we do all the moving, we do all the decorating, we feel at home. Then one day we get the call that our spouse got hurt at work, the main breadwinner. And I'm not going to say it's husband, sometimes it's the wife too.
Right.
We get that phone call, you know what, you have to rush to the hospital, something really bad happened. Just imagine getting that phone call and everything stops for a second. It's like nothing else matters, you just going because it's your loved one. After, diagnosis and everything, the doctor tells you, you know what, you won't be able to work for the next 6 months. That gets me. Yes, that gets me chilled just talking about it, because that moment is we're going to get through it. Yes, being positive and having our faith is amazing, but also having the back of us, you know what, if we would just invest in a small amount monthly, we would not worry about what's in the bank, what's going to happen. I have to call work. What is all the PTO I have, right? What is all the paid vacation I have? Let me cash everything out, and you still can barely make it through, right? That is where mortgage protection comes in place of, depending, of course, it's a different amount, and also the amount of the mortgage. What is the average of mortgages in Houston, would you say, well, in the sector where you're at?
Well,
Shelton?
maybe 200, 250, something like that, you know. And I apologize if you guys are hearing some beeps in the line. I promise my phone is on Do Not Disturb. And every time these shows come on, someone wants to disturb me. So I apologize for the beeps if you guys are hearing them throughout the end of the show for the last couple of minutes. But anyway, 200, 250, you know, 300, the average price of houses that people are looking at right now.
And that's definitely a good average of, you know, for us Americans, especially in Houston, if you want the medium average family income to go into, and a protection for 250, right? So the way it works out is mortgage protection is if you get disabled, right? You get disabled, critically ill, or a terminal illness also, you can access a certain amount of the face amount. So going back to this, let me break it down a little bit more.
Yeah.
For example, critical illness is any kind of heart attack, any kind of cancer, any kind of paralysis, major heart attack, stroke, you know, major organ transplant. That is considered a critical illness, okay? And if you guys are listening, I would really, you know, stop for a minute and take notes, because you may be going through it, and you may have this account, this program, and you need to ask your representative, your agent, what do I have? What benefits do I have? Because if we don't ask, we don't know. We've had situations where they have the coverage, they don't know they have the coverage, and they went through the illness. Shelton, can you believe that?
That's crazy.
Yes, they went through the illness, but they didn't know they have these living benefits. They are called living benefits because you don't necessarily need to be passed away in order to access money from this kind of insurance, right, of mortgage protection for your house. That is, going back to it, that's critical illness. Chronic illness, that is, for example, you get disabled and you cannot perform 2 of your daily activities. I'm going to elaborate on this. For example, bathing, dressing, you can, you know, feed yourself, you can transport yourself, you need help. You're contained either to your home, you know, that you can't move around that often. That's chronic illness. That's considered more of a disability, right? Where the doctor tells you, you know, you need to go to physical therapy, you know, to get back on your feet. So going into $250,000 mortgage protection for your home, right, and you get disabled, you can access up to 90% of the value, 90% of the $250,000. This necessarily does not need to go to pay the mortgage, right, or to pay the medical bills. Of course, that's what we're going to use it for. But what I'm trying to get across is that the company is not going to ask you where is every penny going to, because obviously you don't want to lose your home. It's going to go to pay your mortgage, because yes, you get disabled, but guess what? Our bills don't get disabled.
True.
The bills still keep coming through, right? And the kids still got to go to work. The family still has to eat. And there's still income that has to go out, money that has to go out. So the mortgage protection is very important, not only for the person that is on the main, what is the title of the home?
Yeah,
right?
the deed, the title, yeah.
Not this, let's say, is John Smith, right, is the main, you know, but you can get mortgage protection on the spouse of Mary Smith. Mary Smith can get a mortgage protection because guess what? if Mary Smith, and she's a stay-at-home one, and she gets hurt, she can no longer move around, then, the husband is going to suffer too, because then he has to go around, get the kids from school, get somebody to clean. There's going to be extra expenses. So mortgage protection can also be for the spouse that is not on the title of the house, on the mortgage.
That's good.
It has protection. It is really good because accident can happen. Putting up Christmas lights and then the ladder breaks and you break your tailbone. Guess what? You're disabled. Right? And it's anything. For example, I have a client and just going through the claim process and we're wrapping it up. We did her a mortgage protection as well.
Yeah.
She did $100,000. We did $100,000, and this was back in August, right? And I'm sorry, in July. Yeah, it was in July. She started everything, paying the premiums in August. By the end of, it was around Thanksgiving, she got in a really, really bad car accident in Shelton. Somebody hit her from behind, right? And she was caught in the middle. Her knees were out. Her back, lower back was out too. Doctor said she needs surgery in both knees and in her lower back. Talk about some.
That's a lot of surgery.
Talk about some bad surgeries. You know what I mean? She is a self-employed. She cleans homes for a living. She has her own little business going on. She has 2 ladies that help her clean, and she has her clientele. Guess what? She's not going to be able to go up the stairs in one of her clients' homes. She's not going to be able to drive her own for a couple of months. Out of those $100,000 of coverage that she had, she was able to access $20,000. She's like, you know what? This is all I need. I don't want to access no more. I just want to get through the surgery, have enough money. She rents an apartment. Her expenses are not that much. She's, an older single lady.
Right.
So she didn't need that much. She's like, I'm fine with $20. I just need my car to be paid and my apartment. But in a couple of months, August, September, October, 4 months that she paid, into this mortgage protection, she was able to access $20,000.
Now, question.
$20,000.
Now, you stated that she was in an apartment, though, right? And she was still able to get mortgage protection even though she was in an apartment?
Exactly. Right. Because it is a protection for yourself because, yes, it's mortgage, but it's still, you're paying, what's it called, where you live at?
For your living expenses. Okay, so you pay for your living expenses. Okay, your homestead, if you will.
Exactly.
Okay.
Exactly. Your living expenses. So, because I'm telling you, this is, I don't know what they call it, mortgage protection. They should call it like disability protection or something.
Yeah, some just-in-case protection. And you say it's affordable. So what are the typical monthly fees on this? Or is it determined upon your health age? Or, what's the determination as far as the cost associated with this particular program?
Well, what is the what?
The cost, like the cost that's associated with it? Is it like is there like a particular fee based upon age or where you're living at? I guess, what's the criteria, I guess, that sets the price?
Yes. So it does have to do with the age. Okay. For example, this lady, she was 51. She wasn't that older. She was 51, 52, paying $75.
Okay.
Right? It is $75. I mean, it's something, you know what, I want protection. But you know what, she solely did it for leaving something for her grandbabies. That's the main purpose why she did it. I explained the living benefits part. I told her, it's something that I would highly recommend. She's like, okay. Without even thinking something will happen. Of course, we never think something's going to happen.
Right.
And she's like, okay, I'll go ahead and pay for it. It was 70 or 60. It wasn't that much for her budget.
Right.
So, and she was a female. Of course, it's a little bit higher for males. And, of course, it's definitely higher for somebody that's a smoker. So, people, if you guys are smoking, please get on the patch or get on the gum or go turkey, right? Because over the course of time, it is very expensive. Not only the